Hello, everyone. Inflation in Turkey is exploding, and if they don't reverse course on the current policies, this will get real ugly real soon. So let's go through this article. Inflation in Turkey explodes to 36.1%, blowing away estimates as hyperinflation sets in. Think 6.8% CPI is high. Think again. This morning, long suffering Turks living in Erdogan's macroeconomic experiment woke up to learn that country's annual inflation rates surged to 36.1% last month, its highest in 19 years. So December inflation was 36.1%, blowing away expectations of only 27.4%. So expectations were only 27.4% and laying bare the depths of a currency crisis engineered by the president's interest rate cutting policies. Staples such as transportation and food, which took increasing share of households' budget during 2021, rose even faster. So even though headline number for December is 36.1%, the transportation and food cost was even higher. As you can see from this chart, the last time the inflation was this high was before 2003. In December alone, consumer prices soared by hyperinflation like double digits, rising 13.58%. Uh, Eating deeper into earnings and savings of Turks ravaged by Erdogan's demented economic turmoil. Surge in prices reflected a more front-loaded exchange rate pass-through than usual, triggered by the size of exchange rate depreciation. So it seems the higher inflation is because the weaker lira numbers have been used to front load the calculation. However, as Goldman Sachs notes, inflation in categories like services that are typically not as sensitive to exchange rates rose sharply as well, reflecting the lack of anchoring of inflation expectations. Core inflation also surged to the upside, rising 31.9% year on year in December from 17.6% year on year in November. So that's almost double just month to month inflation. Given the sur- upside surprise with month on month inflation of 13.6%, not seasonally adjusted, Goldman thinks the inflation will rise above 40% in quarter one of 2022 and remain there for most of the year. Now that is almost hyperinflationary. Explosion in prices is tied to the record. Oh, actually, in this chart, you can see transport and food, which is the most common spend, is has the maximum inflation. Explosion in prices is tied to record drop in Turkish lira, which lost 44% of its value last year as the central bank slashed interest rates under a drive by Erdogan to prioritize credit and exports over currency and price stability. So the focus is more exports than the stability of currency. And the currency lost 44% of its value. On Monday, it whipsawed down 5% and then up 3% before trading flat at 13.2 versus the dollar. Some economists are predicting that inflation will reach as high as 50% by spring unless the direction of monetary policy is reversed, which, as Erdogan has made very clear, it won't be. And after the central bank is done blowing tens of billions of dollars, it doesn't have to keep the lira from cratering. We expect total currency and economic collapse. I mean, if they don't reverse the policy, yes, I would agree with the statement. It'll be total economic collapse. Rates should be immediately and aggressively hiked because this is urgent, said Özlem Derici Sengül, founding partner at Spin Consulting in Istanbul. Özlem will probably be arrested in the next 24 to 48 hours for pointing out the obvious. Well, even though article is just being sarcastic, it's a possibility because that's what the president has done and arrested some journalist and economist last month, only a couple of weeks back. The central bank was, however, unlikely to act. She added, and annual inflation will probably reach 40 to 50% by March, by when administered price rises would have been added into the mix, including a 50% minimum wage hike. And expect that if the inflation is remains high or even increase further, as these guys are suggesting, more such measures like wage hikes will happen, which will feed into that higher inflation and hyperinflation. While last year was the worst of the lira in nearly 2 decades, while the annual CPI was highest since the 37.4% reading of September of 2002, 2 months before Erdogan AK party first took office. So yeah, this is really good historical point to remember. Before 2000, in 2002, when the inflation was high, Erdogan took over, and this is kind of an indicator he might be thrown out because of high inflation. Bank has slashed the policy rate to 14% from 19% since September, leaving Turkey with deeply negative real yields that have spooked saver and investors. So the right measures would be increasing this policy rate higher to control the inflation, but instead they are reducing it. Many queued last month for subsidized bread in Istanbul, where the municipality says the cost of living is up 50% in a year. I did an article on this few days back. Um, People have started dumpster diving for food, and with 50 plus inflation in food, yeah, it's not surprising at all. And just like in the US, the Turkish central bank has idiotically argued that temporary factors had been driving prices and forecast a volatile course for inflation, which, having been around 20% in recent months and mostly double digits over the last 5 years, it is said in October would end the year at 18.4%. So just like US, they think it's just temporary. Sengel said that with Monday's data, the argument was over. This reflects a vicious cycle of demand pull inflation, which is very dangerous because central bank has implied the price pressure was from cost pull or supply constraints. And this is really the mic drop moment. Unfortunately, government won't see this, and they will do same old, which will exacerbate the situation. Reflecting soaring import prices, December producer prices index rose 19.08% month on month and 79.89% year on year. Oh boy, 79.88%. Annual transportation prices soared near about 54%, while the food and drink basket jumped 43.8%. What does all this mean for the worst performing currency of 2021? Well, at first, the Turkish lira weakened sharply as the market did the only logical thing it can do when hyperinflation sets in. It sold the currency, and in the early trading, the lira depreciated as much as 4.5% per USD on the first trading day in the new year, extending its losing streak to a sixth day, having given up more than 30% on the gains made after President unveiled a plan on December 20th to bolster the lira by shielding savings held in local currency. So 4.5% drop against US dollar on the first trading day of the new year. However, shortly after, the central bank stepped in with yet another ridiculous intervention that cost it about $1 billion. At this rate, the central bank will be out of all intervention funding in few weeks, and in the lira, reversed losses of as much as 4.5% to gain as much as 3.6%. Now, this is another ridiculous policy. They are throwing more money to just kick the can by 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 weeks, if not days, because ultimately they will be left with no money, as the statement says, to perform any intervention. In which case, lira will drop precipitously, and inflation will be off the chart. Goldman wrote the bank continues to believe that uh, current interest rate policy with rates of 14% supported by administrative and quasi physical measures will not succeed in stabilizing the lira sustainably. And while Goldman forecast is for rates to rise sharply in quarter 2 of 2022, the bank's Turkish strategists admit that his confidence is not high in this call, given that the authorities continue to prefer non-standard policy choices to attempt to stabilize the lira. As a result, the most likely outcome is that the currency will soon retest and breach its all-time lows as the Turkish economy sinks into hyperinflationary mire. Couldn't agree more. So the highest so far has been 18 plus to the USD. It's around 1320, I think, today. But yeah, I mean, they will run out of any funds to intervene in the market to bring it down, and it'll be raised to the bottom from there. Thanks for listening. Share, subscribe, comment, and I will see you in the next one. Bye.